Welcome to this new episode of Your Next Trade. So many things to discuss this week. We're going to be talking about NVDA, we're going to be talking about Palantir, crypto, the Fed. But first, as always, if you like what you're seeing, put a like, subscribe to the YouTube channel, or put a comments. That will help in the future. So let's start with the charts that we have in front of our eyes, which is the S&P. So the S&P, after the election on the 6th of November, gapped up and went from 5,900, 5,850 to 6,000. More or less, we knew that there were a lot of options, and this 6,000 was a big level for the option market. What we had over the last couple of days, on Thursday and Friday, we had a bit of a move since Fed Powell was clearly saying that the cuts will not be as strong as what he was saying even like a month or a couple of months ago. And then on top of that, you had the option expiry, which had a big move on Friday with the Nasdaq down more than 2% and the S&P struggle as well. So a bit of an elections hangover after this big move that we had across asset classes. So we're gonna go through, as always, so what have been the moves. I want to move directly into the week-to-date asset performance, and where the big outlier has been the crypto, where that is something that we discussed last weekend, actually, when the crypto was around 77,000. We said there are good chances that, based on the inflows that we are seeing and the Trump administration being pretty keen on making the cryptos much more available, that we could go into the 100,000 until the end of the year. So we went up to above the 90,000, and the crypto with the Bitcoin up 20% on the week. What we see as well for the old school guys like me is stocks have been struggling. So we are talking 2% down for the S&P after being up 4.7% the week before, 3% for the Nasdaq, and Russell as well down 4%. So really stocks struggling with actually strong dollar again. So the call for the dollar has been pretty much the same, and that's something we're going to be discussing with the euro dollar. If we look at now the commodities, we are talking gold now that is below $26, WTI, which is really testing over and over the $67. So really, for WTI, if we are trading CL1, $67 is the big level, and copper as well struggling with China, and something that we underlined last weekend, a bit of a disappointing Chinese stimulus, and that leads into the week-to-date industry's performance. If you look at the S&P, so this is your S&P that you have here, you're going to have the Nasdaq here, but overall, many industry that have been underperforming. Biotech down 11% almost for the week. Why? Because between the election, that the results of the election and the end of January, the Trump administration will be nominated many people to lead, obviously, the government. And what has been happening is some nominations are not going according to the plan for the market, and at least, biotech is down 10% on the week. So really struggling. Semiconductors really weak for the week. We are talking 7% down, and actually down 6 sessions in a row. We're gonna have a big catalyst for this week, which is on Wednesday after the close. We're going to have NVIDIA's earnings, and that will be obviously very important for that industry. Other end of the spectrum, what I want to flag is bank, actually. So this is the one. Bank have been doing pretty well for the week. They are up on the week. So that tells you that bank so far, after the move that we had last week, we talked about JP Morgan and the gap. We can be looking at Wells Fargo, JP Morgan, and as well the regional banks. They have been doing very well, and they keep on doing well. So what about the sector performance? The big outlier is the XLV healthcare. As I said, the nomination of Kennedy for the health portfolio is not a good news for the sector. We've seen many names like Moderna, like Sanofi, like Pfizer, anything that is vaccines that have been really struggling from Thursday onward. So a bit of a sell-off in that space. Financials, as I said, doing pretty okay. We are up 1.4% versus the market down 2.1%. So we are talking not performance of 3.5%. Energy doing okay. And other than that, you can see that many sectors have been doing like the S&P kind of inflows versus outflows. What about the rates? So rates, we are talking 4.44% on the US 10 years. And this is really the space that we want to keep on looking at, because on the one hand, the equity market has been very strong. Stocks, making new highs until, Wednesday or Tuesday, let's say. And in the meantime, yields have been making new highs, new recent highs, So if you look at the charts, I don't want to be technical analysis on 10 years, but we are going into the 4.5, 4.6%. As I've been saying, my view is if you go above 4.25, 4.3% for yields on the 10 years, that starts to be an issue for stocks, because that tells you that, yes, you're going to have more growth, but that tells you as well that there's going to be inflation, and that the Fed will be less accommodative. And this is not because you're growing by 5 to, let's say 3%, sorry, for your GDP, and in the meantime, you're going to have 5 to 7% deficit, that your growth is very healthy. So this is a bit of a misleading point, and I want really to make sure that we keep on looking at those 10 years, that we keep on be looking as well on the Fed funds expectations. So looking at the December meeting, now the market is expecting a 60% chance of a 25 bips cut at the end, mid-December. So we went from 2 cuts for sure for now. So that was 2 cuts for November and December for only half of a cut. So in other words, that tells you that the market is pricing a Fed that should be less accommodative, less dovish than it was a couple of months ago. Why? Because we have inflation. Why? Because we have a deficit. So if you look at the last, which is in blue, everything has been moving up over the last few weeks. In other words, you are talking about a Fed, again, less accommodative, and going into December 2025, so let's say end of the year 2025, market is only expecting 3 cuts of 25 bips, and that should give you the rate, the final rate around 3.8% at December 2025. So what about the VIX? Obviously, when we are selling off, volatility goes up, and as you can see, the volatility, the last for the VIX is at 16%, where it was at 15% last week, but a bit of misleading as well, because we went to the 13%. So really, we dropped in between. When you have a sell-off like you have on Thursday, and more importantly on Friday, volatility spikes. So let's go into the technical analysis, starting as always with the S&P futures, and the trend is still the same. We went to the 6,000 on the cash, so that was the level that where we consolidate for a few days, and then as I said, with Powell and more importantly with the option expiry, that kick in the sell-off. We had a huge expiry in terms of notional size. Why? Because the market is more and more driven by options, meaning that those expiries are more and more important. What about the Nasdaq? So obviously Nasdaq has been moving big as well. We're still back and above the level that we had on the 6th of November where we started to move. So in other words, we are roughly back to end of Tuesday the 5th, before the election, so not the end of the world. In the meantime, you do have obviously other assets that have been moving big time. Here we are talking at the crypto through the Bitcoin, and that is a significant move. So far so good. You see I'm not a big fan of RSI and just saying, it's oversold or overbought, but, what you can see is we had a massive move, 82 on the RSI. That doesn't mean that it can go much higher. Don't get me wrong. And I want to be looking at the old school Bitcoin. this is the gold, and we're at 25.63. So I think many retail have been punished on that one, because above 2600, many retail investors bought gold, and now we are below that level. Some other names that I want to discuss: euro dollar. So euro dollar, we discussed euro dollar last week, and I said at 107 that there were good chances that we will go to 105. The trend is still the same. I think there is still a bit room to go lower. So at least you make your 200 pips in the week, which is not that bad. And I want to be discussing NVIDIA. Obviously, we're going to have NVIDIA on Wednesday, as I said. So I played a bit NVIDIA this week. I played a lotto ticket on Thursday. I played the weekly puts. I played 140, 142, 144. So I was a bit lucky. I made a bit of money. The idea was not necessarily for a sell-off, but I was more expecting some tension around SMCI and the delisting or not. So the stock, went to 140.05, I think, on Friday. So I made good money. But this is the chart. This is what we have been doing so far. We are back to the support now, which used to be a resistance, and going forward in the next 5 minutes, we're going to be looking at how the stocks have been doing over the recent earnings. What about KBE? So this is the bank, as I've been saying. We gapped up, so the chart is pretty good. We gapped up, consolidating in big volume, so a lot of interest into that name. So let's look now into the what happened for the week. So this is this week. So we let's start as always with a bit of macro, looking at the CPI and the PPI. So here on the left hand side, this is the CPI, the core CPI year on year since 2014, and as you can see, there is a bit of consolidation. So is it going to go higher? Same with the months on months, where you can argue that we did that. So the question is, are we going to flag higher? Why? Because there are many indicators that are telling us that we could be going higher for the inflation due to the Trump administration being very keen. So forget about this one. This is for the S&P futures from last week, where actually you should be looking at a chart that did like the other way around. So clearly the opposite. Going back into inflation, really this is the space, one of the space to be looking at, because the market has been saying FOMC doesn't care anymore about CPI, about inflation, but it's mostly about the job market. As always, when the market starts to price nothing important, this is the moment where the outlier is going into your favor. So as a trader, you want to be playing the odds that are best for you, where the risk return could be the risk reward, so issue could be the biggest, and this is why inflation through the TLT, through the 10 years is an interesting one. Another one that is interesting, retail sales. So the retail sales, that was yesterday on Friday. The headline number and the numbers were a bit lower, but what we can say is actually the revised number were much higher. So the September numbers were really good. We saw some other numbers that actually make us believe that with the Trump election, we're going to see some good macro numbers and some appetite coming back. Deregulation. As we said, we discussed this deregulation. What are the trades going forward? So that was last week. We say we're going to have tariffs, we're going to have deregulation, we're going to have new nominees for the government, and XLV or biotech was obviously one of them. Then we had the Powell speech on Thursday, where, as I said, he was very much less dovish than he was a couple of months ago. And I think the Trump administration, the election, have been making a bit of a twitch in what he has been saying. We had the option expiry, so as always in your calendar, on the third Friday of every single month, put that, because that's a big magnet, and that's a big change if you're looking for direction. Finally, this market has been, over the last 3 to 4 years, completely changing in terms of structure. We are talking calls, we are talking short squeeze, and Palantir is a very good example. So, as you know or don't know, the stock went from 40 to 65 over the last month or so, based on good earnings, okay earnings, and as well on kind of, playing with the rules and moving stock from first going into the S&P, and they moved yesterday the stock to go to potentially having access to the Nasdaq 100. So the stock did very well, as you can see. So this is the chart, and in green, yellow, you do have like the activities in calls every single day. That is something that we experience with NVDA. This is something we experience with Tesla. And these days, it's mostly about Palantir. What is interesting is one of the board member, so this is this person here, pretty adamant in saying, my job here, and we have been very keen on squeezing the stock and making very painful for short sellers. I think this is interesting, and that tells you a lot about how the market has been over the last few years, and what are the names, how the names have been driving. This is pretty astonishing to see a board member publishing and writing such a tweet. And then obviously, because it's a question of the SEC here. If there is the SEC, he withdrew and deleted both the email, the tweet, and his account. So looking into the catalyst, I think it's more important if you want to be making money. Let's start with what is the expected move for this week going forward is plus minus 1.5%. If you think about last weekend, we were at plus minus 1.2%, and we did twice that move. So if you were long the straddle this week, you made good money. Why? Because very often when implied volatility is that low, not that low because it could go much lower, but when it was at 13%, what happens is, actually it's hard to be selling both volatility, and this is what we had. But going forward, plus minus 1.5%. What I want to flag is there is the seasonality, where from the 15th of, let's say around Thanksgiving, there's a bit of weakness in the overall seasonality. So here we are looking at the S&P over the last 20 years and how the S&P is normally doing. We flag the seasonality, saying seasonality going into the end of the year is pretty good. So, but there is a caveat here, which is this week where you could see some weakness between the 10s and the 20s. Then you should have a rally. As always, this is not because this is what happened in the past that it's going to be happening again. So be careful. What about the macro? So macro, we're going to have some housing numbers, NAHB. We're going to have the building permits and as well the flash PMIs on Friday. So this is for your leading indicator. Earnings, I didn't put all the conferences, but as the earnings season is almost over, you're going to have more and more companies doing conferences, and that's going to tell us, they're going to tell us, what's going to be the outlook for 2025. But some big names, so we're going to have for the retail, we're going to have Walmart, we're going to have Deere, which I like to be always monitoring because this is like Caterpillar, a good indicator for the agricultural world, about China, about, how the overall world is doing. But really the big name is obviously NVIDIA at the close on Wednesday after the close. And the expected move, we are talking an implied move of 9.3% based on options. If you look at the straddle for next Friday, so expected move plus minus roughly 9% for NVIDIA, where if you look over the last 10 earnings, we are talking 8.7%. More recently, as you can see, there is more green than there is some red. But if you look at NVIDIA, what are the expectations? Expectations are pretty high. They keep on delivering. We do know that they have a new product coming. But I look even at the sales again. Expectations, we are talking at like very high number. But this is just for the implied volatility. In terms of other stuff that we had, we're gonna have the G20 Brazil summit. If you want to be talking about politics and everyone, you're going to see many headlines, Trump is a bad man or Trump is a good man. So a lot of noise. a bit of bond supply and a bit of Fed speaker. So overall, not much macro drivers. Mostly it's going to be NVDA on Wednesday, Walmart and Deere. After that, it's going to be a bit quieter because we're going to have Thanksgiving. So normally, last part of November, the volumes are really coming down because most Americans will go back home and the market will be closed on Thursday of Thanksgiving, and on Friday it's going to be half day. But really, as I flagged last weekend, the story is the same. You know, we look at nominations, we look at the tariffs, we look at deregulation, we look at how retail is going to be doing in the next couple of months, but because this is very important, and we look at the market structure, like names of Palantir, like NVIDIA, the way I played it on Thursday with the lotto ticket, where you want to be looking at good risk reward. So this is it for me for this week. If you have any questions, as always, you can send me an email at greg@duponttrading.com. You can join the trading community on Discord. You can watch more videos on the YouTube channel. There is as well a Substack that I'm trying to build. And as well, if you want to be really going into the next level of education, you should be looking at the 4x4 video series. And for the gold level, you should be looking at mentoring, which is one-on-one session on Zoom with me for 12 sessions. So this is it for me for this week. That was a very interesting week, a lot of trading ongoing. Hopefully the market will be staying the same for us traders. And I wish you a happy trading week. Bye-bye.